Good evening. This is Ken Long from Tortoise Capital with a review of some regression line crossover case studies, typical trades that we did in the chat room from January 30th through February 5th, 2014. On all of these, we're looking for one or more of the standard rlco patterns to occur. Primary being the regression line crossover outside the river. Pattern 2 is finding support of the Bollinger Band mean after a successful RLCO. Third pattern is finding support at the far side of the river after an RLCO. Both of those are continuation patterns. The fourth pattern is any lazy W at a typical support level somewhere around the river or the Bollinger Band mean in the form of a lazy W. That's a special case of the patterns 3 and 4. Pattern 5, my favorite, sideways quiet channel. Pattern 6, an opportunity trade called the Anderson Regression Line Stretch, ARLS. All praise to Kim Anderson. And then pattern number 7, a Z trade or a Z-score trade, where price has made a move well outside the floodplain and shows sign of finding support. So we'll see at various times how these patterns play out. The first pattern is, or the first case study is from XIV, and this is a maximum pain MP on January 31st, 2014, maximum pain. So what we had was a pullback on January 30th to 31 and a quarter, down from 36. And then the next morning there was a 4 standard deviation adverse gap, worst gap in 200 days. And looked like there could be a bottoming tail here where it opened, sold off sharply. And then for about the next 30 minutes, almost 45 minutes here from the open, we had what I classify as failure to fail further. And if it hadn't been such a large gap, we would have seen this as a sideways quiet channel. But as it was, this was by far the worst sell-off on an adverse gap in the entire population of potential targets. And you can see that it gapped well outside of the floodplain and even past this third Bollinger Band on the downside. One of the things you notice is that when there is a large gap, that the Bollinger Bands expand dramatically, because in the first 3-minute candle, 29 of the 30 data points are coming from yesterday, which was very tight, and now you get this one outlier here, and that throws the statistical bands very wide, and then it gets very, very wide as you start getting more data from today and less data from yesterday. At 90 minutes in on 3-minute candles, then those Bollinger Bands are going to reflect only the price action of that particular day, because you're 3 minutes times 30 candles into the day. So at 90 minutes on 3-minute charts is when you're seeing a true reflection of today's volatility in the Bollinger Band. We'll see that happen here a little bit later. And so my entry on this one is at 28.75 as price enters the river on failure to fail further. I'm using a 40-cent stop on this one, although it's not unusual for me to use 20 cents under different circumstances. But we got an RLCO outside the river, price entering the river, failure to fail further. On this one, on the dotted line, I will actually stop and reverse at 28.50. Excuse me. I wouldn't wait for it to take out the low of the day. In my view, if it violates those support levels right there, that's enough for me to stop and reverse. But we take the trade with an idea of Bollinger Band mean, and then closing the gap far side of the river for a favorable reward to risk ratio. Now we're a little bit further into the day. You can see that what looks like a sideways quiet channel forming here. This was our first entry. At 90 minutes into the session, you can now see at 11 o'clock how that Bollinger Band pinch occurs, because now it's all of today's price action and none of yesterday's. So it's processed the morning prices. It fails to fail further. The dragon is pointing up. The Bollinger Band mean has rolled over and started to roll up. I take a second entry at 29.15, so now we're 40 cents into this, and now I'm an R in hand. But since I usually use a point 0.2 stop on this, I felt like I uh, had to R in hand with momentum. And so as price leaves the river, this is like a sideways quiet channel leaving the river. So I get my second entry at 29.15 with a 20-cent I stop. Again, failure to fail further. I'm moving my stop up as we go. And then I'm going to use this red line here just below the parabolic stop and reverse signals. Um, so this one would be, in my view, a 5, a sideways quiet channel. I also see this as support at the edge of the river after a successful RLCO. So that could also be pattern 2. It could also be an Anderson regression line stretch when you see the distance between the 10 and the 30. It could be a Z trade based on just how far outside the Bollinger Band this maximum pain event occurred. Um, Here's support at the river. Here's support at the edge of the river. So there are a number of different patterns that we can see. I like it when the 30-period regression line crosses the Bollinger Band mean. That's very good and healthy. I like that the VWAP is going up. I like the slope of the river up. I like the pinch. Later that day, just into the lunch session, we get a maximum favorable excursion here up around 29.70. So that's about 2.5 R in from the earlier trade. And then a pullback as it falls out of the dragon and crosses the Bollinger Band mean. That's enough for me. We cash everything here. This was failure to hold at the river edge, failure to hold at the mean. And when we cash everything at 29.60, that's 85 cents on the first position on an initial risk of 0.4. So that's a little over 2R. And then 45 cents on 0.2 initial stop, it's a little over 2. So netting out around 4R. And a nice morning work after this maximum pain. The next day in VXX, this is the regular VIX ETF. So this vertical blue line is the open, so it closed here and now opens here. We have holding support here at the dragon and above the Bollinger Band mean, and then leaves the river again. I treat that as, because there was no gap on this one, I treat this one as support at the edge of the river. And even a lazy W. So that's like a 4. I like this entry here. This is the beginning of trending behavior. We have price and both regression lines outside of the river, so the 10 comes out. So I go ahead and take this one. And first entry at 50.25. It's early in the morning, so I take a 0.4 initial stop below the dragon. Moves out sharply in our favor, moving the stop up along with the dragon, the spine, if you will, in the parabolic. Get a second entry here at 51.25. That's 2R in hand, plus momentum. Find support at the dragon and well outside the river and takes off again. Get a third entry, moving my stop up here to about 51.70. So our last entry was at 52. So these are all, I see these as lazy W's and support at the far side of the river. And then we get our exit. We get a move outside of the floodplain, lower high. The candle closes, opens and sells off a little bit, so we take it at the edge of the dragon, exiting everything at 52.25, and those three positions net out to about 8R. So a pretty good day at work. The RLCO, you have to be out not later than this signal anyway, so a slight improvement on the exit by taking it after the 1, 2, 3 sell off with a lower low on the live candle here. So I'm happy with that exit. There's a potential trade here on the RLCO with the idea of a target of about 51.90. a reversion to the Bollinger Band mean. You can already see that happening here. You have to get on that pretty quick. If you wait for it to re-enter the river, still tradable, but you're running out of downside target. This is the next day, February 4th, 2014. This was a tradable move intraday, but I want to show an afternoon trade. This is at 2 p.m. Eastern. And so we had an RLCO up, gets to the maximum favorable excursion, RLCO down, collapses outside of the river. This is a Z-score trade. You can also see the stretch between the 10 and the 30 period regression line, so potential ARLS, although we like to see a sharper move than that, a bigger gap. But it's certainly a Z-score, and then you have an RLCO occurs here outside the river. I decided to take my entry as it enters the river. This is just bread and butter pattern number one, RLCO outside the river, and entering not later than price entering the river. So I'm in at 26.82 with a 20-cent initial stop here, just below where that 30 turns. It starts moving in my favor. I'm raising my stop up to get to no lose, locking in some profits. At this point, as it's cresting a little bit, and it's been 6 minutes without really breaking it out to a new high, it's above the Bollinger Band mean. I go ahead and lock in 27 with a stop right here. It goes up one more leg all the way up to about 27.27, pulls back. As it gets to the edge of the river and starts failing, I decided, and it's getting late in the day, I go ahead and take my exit at 27.15 on a single position. This is an RLCO outside the river. The target on that is the Bollinger Band mean. You can see that why that's a good trade. It gave back every single thing that we worked so hard to get. So taking this exit and locking in the profit is reasonable. If you didn't have that trade, or if you wanted to stop and reverse where we exited, that trade is a pretty good entry on the other side with a stop up here, and you would have gotten maybe even a couple R out of that. I wasn't quick enough to do that, and it was getting late in the day. So we knock out 1.5R on that one. This one is from February 5th on TZA. That's the triple inverse Russell 2000. We're at 10 o'clock here. We've already had one nice move up. I was trading VXX on this one, so I didn't get the first leg up. It pulls back after a move out into the Z-score land here. So I start stalking it. It comes back, finds support above the river. I see a 1, 2, 3, higher low, takes out the high. This looked like the anomaly right here and continuing to go. So we take this trade at 19.97, 30-cent stop, gets it below this excursion. 9 minutes later, it's up at 20.22, so I'm a little over half an hour in hand, so I go ahead and move to no lose and lock in 20.04. I see this one as support above the Bollinger Band mean after an SQC or an RLCO. So I see this one as a pattern number 2 kind of an entry. It moves in our favor. I make a second entry at 2028 when it takes out this intraday high and the rest of the market is failing. I see that reinforcing this. 6 minutes later, it moves up to 2060-ish. I go ahead and lock in a no lose at 2036 or 2038 here to keep the second position in the money. Shortly thereafter, we get a 1, 2, 3 exit. I go ahead and take everything at 20.40. Nets out 1.3R. That's just a bread and butter right there. SQC, support at the edge of the river, taking off on the next leg up. That's you can think of that as a lazy W as well, with support here, support here, support here, and moving out, finding support where it should. Notice how the dragon acts as a support here, pointing the way to the move of the day. This last one is a picture perfect trade from a guy in the chat room. learning how to do the techniques here. And so what he's got is a relative strength in XLV. It was one of the strongest sectors in the S&P, and it was doing better than the S&P, and Johnson & Johnson was doing better than XLV. Made a higher low, so we can think of this as a lazy W after a successful RLCO. Here's a low, here's higher lows, a higher low, a fifth higher low. We get this RLCO from outside the river. He buys it right here at 87 a quarter with a 25-cent stop here below the floodplain. Comes up and makes a nice orderly move up, and then in the middle of this big red candle, it fails to follow through. It hesitates right where it has hesitated the last two times, so don't stick around. And he goes ahead and cashes at 87.45, 4.8R. Bread and butter by the numbers, and then it comes back and finds support above the edge of the river. This is another potential leg up, which you can keep stalking as long as that primary trend is in play. Nothing wrong with that. So picture perfect trade, well done. So this is a series of case studies that we did January 30th through February 5th, outlining a bunch of the different patterns, the 7 standard patterns of the regression line crossover that week. So thanks for your kind attention.